So as you say, we are in West Africa, in Burkina Faso. Great place to do business in terms of mining. 15 successful mines built. We will be the 16th. In fact, we will likely be the next mine in Western Africa in the area. So forward to the statements. Yes, I have it now. So next slide, please. We are shovel ready. We have just awarded our EPCM contract to Lycopodium. They have built probably 8 of the past 10 mines in West Africa, 3 of the most successful ones recently in Burkina, and another one recently in Cote d'Ivoire for Perseus. What was quite interesting about the Cote d'Ivoire one, which we followed very closely, was it was done during COVID, so we wanted to check and see if it affected anything. And in fact, it was brought in under budget and ahead of schedule. So great news for us, and we're getting that team straight from Perseus onto Bombore. The debt package should be announced, I'm hoping next week, but it'll definitely be by the end of the month. And so we're very excited about that. And I think it'll take a few people by surprise, the package that we have actually negotiated. So a very clean package for a junior company, particularly in West Africa, which has had some, political issues over the past little while. But as a junior single asset company, we are very, very pleased with where we're going with this. And it would leave a lot of upside for our equity holders. And we think we're in a very attractive entry point here for the equity markets. We have a very strong shareholder base. One of the key things I do point out to people is that besides ORZCF, who are a 20% shareholder, very, very supportive and will continue to be very supportive. We have 3 large US funds who own around 10%, which is quite unusual for a junior company, particularly in West Africa. But they've all been to the project, they've all met the team, they've all seen what we're doing. So that sort of gives a big thumbs up to where we're going with this asset. And there's a huge upside to it. We've done all of our reserves at $1,200 gold and our economics at $1,300 gold. And so obviously at 1,800, it's a hugely different beast. Burkina Faso, for those of you who don't know it, about the size of Colorado, 15 mines, as I said, 2 recently built in the past couple of years very successfully. One right beside us, which is WAF, Sanbrado. That company has gone from 22-cent stock to $1 stock. It's $1 billion market company almost right now. Very successful startup, and that's huge in the economics of any project. The other one was Teranga's Wahgnion project to the south, about the same grade as our sulfides that we will be bringing on stream in year 3 of operation. But their strip ratio is about 7 to 8 to 1. Our strip ratio will be about 2 to 1. So I think you'll see the economics in terms of the oxides and sulfides going forward. And we're ideally located. We are on a paved highway. We're less than an hour and a half from the capital, no dirt roads to the project, straight off the highway onto the property. The site visits by the lenders was very, very successful. And, one of the key issues was the easy access to the project, the easy logistics to the project. So we've done our economics at $1,300 gold, but obviously our NAV at $1,750 is, after tax at $732 million, IRR of 88%. So right now our reserves recovered at 1.6 million ounces, but we're pretty confident we will go beyond that. And one of the key things that we wanted to negotiate in the debt package that we hope to announce here in the next number of days is the flexibility to grow the project. Not only just adding to the sulfides, but also really adding to the oxides. We're doing a new resource and reserve update likely in early Q2. We see real upside here. We're very shallow into the sulfides. We've got lots of exploration upside. So we're very confident that we will expand this project. And one of the key issues of the debt was being allowed to do that with no cash sweeps to the lender and no hedging. So, it's a very, very attractive finance package when we announce it. And our all-in sustaining costs match everybody else in West Africa. So, it's pretty standard there. People ask us about the oxides and the grade, but we tell them, go look at Robex in Mali, a third of our size, same grade, same little less recovery percentage, same strip ratio, all-in sustaining costs every quarter, $700 US an ounce, and they pay a dividend. So just a pretty good sort of benchmark for what we will be doing in the oxides. Simple project. People ask me, how come West African projects pretty much all get built on time, on budget? I used to run an engineering construction company in the 90s. And one of the key things that always caused problems with construction, with earthworks, geotech work not being up to standard, etc. In West Africa, it's sort of like West Australia, you know, the Kalgoorlie area. You know, it's flat. You know, it's sort of got a Fergus iron cover, very, very easy civil construction. You don't have to put up buildings. You could do what I call 360 construction, so you can build all around the plant and get it up and running. You know, testament to that would have been West Africa's Sanbrado. They broke ground in March of 2019, and they poured gold in March of 2020, and they were up to full scale, throughput a month later. And we expect the same, and that was done by Lycopodium. And that's a list of projects in West Africa on budget or ahead of or under budget, on schedule or ahead of schedule. You know, 7 or 8 of them built by Lyco. They're all sort of cookie cutter designs. We will absolutely be the same. We have process guarantees and timeline guarantees by Lyco, so we're very confident we will do that. One of the key things that I like to point out to people is startup. You know, getting things up and running at full tonnage to nameplate recovery. And we've tracked this, and of the last several plants, the average to nameplate throughput and recovery is 31 days. You can't find that in North America. It really does not happen. And and that, in terms of your NPV, is huge, and in terms of your payback of your debt. So we think we're great value in the value sector. We're right at the left-hand side of this, bar chart. Obviously, when you get up into construction, into production, that goes to the right-hand side. So we think we're a very attractive entry point there. The same with our market cap to NAV. You know, you look at the ones that have started up and construction and gone into construction. You know, there's been a huge accretion in value there, and we expect the same here going forward. And what you do notice in West Africa, you generally get a lower multiple, while you're not financed. But once you get financed, it ramps up very quickly because the success into operations are very, very strong, in terms of cash flow, etc. And we've taken single asset companies here, comparing an apple to an apple, not really driven by a run on gold price, purely driven on success, i.e., from when you start a construction, your length of time for construction, and a successful startup. And these are 4 single asset companies, 2 in Canada, 2 in Burkina. And you can see you get that same multiple, whether you're in Canada or whether you're in Burkina. So we see a huge value proposition here for Orezone once we announce this debt package and get going into construction. Simple layout. We've done this, and the banks love it, by the way. In terms of the oxide being separate from the sulfide, we're not trying to intermingle rock. The sulfide can run completely independent from the oxide. The only time the slurries commingle is at the CIL, and it doesn't matter if it's 10% sulfide, 90% oxide, or the other way around, or whatever mixture. We've done all that test work, same recovery. So we can run the oxides full bore while we build the sulfides, and when we bring the sulfides online, if we have to do a maintenance on the SAG mill, we can continue to run the oxides full bore, or vice versa. So quite a unique design, and again, from a point of view of economics, very, very attractive. And lots of expansion potential. We've only brought the sulfide pits down 90 meters at this point. We've done the reserves at $1,200 gold. We've only focused on the high grade, but we see lots of expansion potential here in the sulfides. And we've left that space in the sulfide layout to allow our sulfides to be double the throughput here once we get up and going. Lots of exploration potential. I think P17 South, we discovered it and drilled it off in the past couple of years. It's wide open now. We know it's a folded plunging unit. We've seen it repeating itself up here in P17 and P17 North. Some drilling in between that absolutely tells you it's there, but nothing to bring it into reserves at this point. But we will get at that. And hopefully the debt package, when we raise our equity as well, will allow us to do some exploration here. We're very excited about P17. It's a huge economic driver for us in the sulfides. So we really want to get that expanded, so we have a long-term high-grade sulfide feed to this plant. And so we've also been modeling in the main deposit. Once we discovered P17, we realized that we may have missed something particularly in the hanging wall. We went back at that again, drilled underneath some of these folded zones. Very, very good results in Maga to the north. We've really proven that out. But again, we haven't drilled down into the sulfide. So lots of exploration potential here going forward in the main zone itself. You can't do these things without community support. I really can't take a lot of credit for that. That was done long before I came on board as CEO. They started when they were doing the first stages of exploration. The banks, when they went to site and they would get out of the vehicles and go talk to the locals, we were building the villages at that time. Hugely positive response from the local people. Very, very supportive. That wrap is now done and they've moved. The villages are built. We did that ourselves, self-managed it. We've now moved them all off-site so we can get onto the project ourselves. Our community support, our local programs are of a very, very high standard. So we've got, again, a huge support going forward. And these people built their own villages. We spent time and money teaching them the trades such as bricklaying and light fabrication, welding, etc. And so they actually built their own houses and got a benefit from it going forward. That's the new school, fully opened. Clinics are opened. Churches and mosques are up and going. So I was there in September. I'm going back at the end of this month. It's something to be really proud of what we've done here. So Orezone, just leave you a message going forward. We think that the IRR with the gold price will be reflected once we get the financing. We are one of the few projects out there that are ready to go to construction. We've been very diligent about getting our financing package together that gives huge upside to our shareholders, and we expect strong support there. So it should be a very exciting year for us, and I look forward to announcing the financing package in the coming days.